Hey everybody, what's up? TJ McClellan, broker of Fitness Realty, here for another fun podcast. This one's actually going to be episode 109, and we're going to use one of the real estate news articles, and we're actually going to go through that together. So I have it pulled up right here on my laptop. I'm going to read a little bit about it. I'm going to weigh in a little bit about it. As you guys know, the real estate market is kind of crazy at the moment, and so we're going to go through this together. So this real estate article was posted July 17th. So hopefully we get this episode out pretty quick. But it was written July 17th, literally about 5 minutes ago. So I just pulled this one up. This one's called Housing Market Decoded. Why are home prices still rising? And as you guys are seeing out there in the real estate market, that prices are either staying stagnant a hair, depending on which market they are in, or they are continuing to rise. And so we're going to talk a little bit about that right now. So the first part of this article goes over the numbers. And so I want to read some of these stats to you. It says, according to Freddie Mac, the average rate on a 30-year fixed rate mortgage has been around 7% since February, topping out at about 7.22% during the first week of May and settling just below the 7% mark in July. And that's kind of where we're at right now. Rates are about 400 basis points higher than they were in 2021, and 400 basis points means 4%. So if we take 4% away from 7% where we were at, that would be 3%. So everybody that's got an interest rate lower than 3%, historically that has never been the case. So those loans, I would never refi those ones anyways. And I probably would never sell that house. I would just turn it into a rental and continue to move along with your wealth building and with your life. Okay, let's see. Home prices nationally continue to rise. The National Association of Realtors reported that the median home price of an existing home was $419,300 in May, which is actually up 6% from a year ago. And that's nationally. So Utah's got different pockets where they can actually be hotter or a little bit colder than the trend. But just take that into perspective. So if you have a $400,000 house and that goes up 6%, that's probably right around the tune of like 22,000, 23,000, something like that, if my math's right. So if you're a math genius, write down what 6% of 40,000 would be. Right off the top of my head, I guess I just can't do public math when I'm on video. It's probably 24,000. So anyway, let's just keep on going. So the explanation, this is the explanation to what they say is happening right now in the market. Since high mortgage rates make the cost of buying a home go up, shouldn't home prices come down? That's a valid point. So as money gets harder to get from the bank, it should make that competitive advantage for buyers go down, which you think would make the prices go down following that. However, this article says the relationship between mortgage rates and home prices is not as clear cut. Over the past 4 decades, there have been times when both mortgage rates and home prices were declining, which would have been in 1991 and then obviously 2008 through 2011, which was another anomaly. We've also had years when mortgage rates were low and home prices were rising, which would have been 2003 and 2012. And you can kind of see both of those are in correlation to coming out of some type of recession. We had like the dot-com bubbles and stuff in the 2000s, and then we had the huge financial crisis in 2008. So to have home prices rising again after those terms in 2003 and in 2012, you can kind of see why those are correlated together. But between 1988 and 2024, the correlation between average rates on 30-year fixed rate mortgage and home price appreciation is weak at best. So according to the statisticians, they are saying that the correlation just doesn't exist between the home rates and home prices. And I actually think that that's really relevant and true in our market right now. The biggest thing, though, in my opinion, is the inflation of the money supply is still pumping the home price up. And so we're going to continue on with this and see if it keys in on that. I don't know if they're going to get to that point, but let's find out. So in big, bold writing, they have big gains in housing equity. So let's see what they say about that. Mortgage holders saw near record levels of home equity in the first quarter of 2024, which is pretty true across Utah as well. Nearly 40% of U.S. homeowners do not have a mortgage at all. That is crazy. Okay, so they say 40% of homeowners do not have a mortgage at all on their home, which is a very big number. Anyway, I think that's kind of crazy. So one key caveat to that is the generation that is holding all of those homes with no mortgages is probably the later generation, older generations. And so there is a huge amount of wealth attached to those homes that don't have a mortgage because they're not leveraged. One day, those will either get turned over to the state through probate or potentially to family members or a trust or will or whatever. But that equity and that position of monetary value will transition to younger people eventually, which is kind of crazy. So there's a lot of wealth out there in Utah, or not. I mean, there is a lot of wealth in Utah, but nationally, there's a lot of wealth being built in real estate. Let's see, another one, very low supply. So contrary to popular belief, it still feels like we have a very low supply count in Utah. We did just recently go over 10,000 listings across the MLS, which doesn't mean too much to anybody. It just means that we did have a small bump in amount of listings that were out on the market from about April or May timeframe to the June, July timeframe. There was a slight bump up in amount of listings. However, nationally and in the state of Utah, we are still way behind on how many listings we need to help the market kind of ease that flow. And we can't build fast enough. And then through COVID, when everybody got their really low interest rate loans, typically a family or a person would start to move and change their situation in a home. But right now, since they're holding such a low interest rate mortgage, most of the time the numbers aren't feasible. And so they just are stuck in their house right now. And so we have this weird conundrum happening in our market that we've never had before, where people are kind of stuck in their home because they just can't afford that next payment because the interest rate jumps up so high to make that move. So typically, families would start to move, they would outgrow their house, they would get a bigger house, their lifestyle would go up, their income would go up, they might get a bigger house. And what we're seeing is there are people that aren't able to do that because they're just locked into such a low interest rate. So the reason why I said all that is because that showcases that we have a very low inventory, because those people that should have moved or made a move and put their home on the market, they're stuck. And so we've lost whatever that pie is that should have been on the market but is not. So anyway, that's why we still have a very low supply count right now of homes available. All right, let's see. They say a positive financial picture for households. And I would agree that there is a positive financial picture for households because there is a lot of wealth being built in real estate right now. And real estate is something that is hedged against the weakness of the dollar. And what you guys are seeing out there is the inflation of the money supply and what that does on our economy. And so you guys are feeling the inflation right now. And to all of your younger generations out there, I would just try to get your foot in the door in the real estate market, because obviously the prices are still going up. They are trending upwards. And a lot of that is due to low supply, but a lot of it is due to the inflation of the money supply. So anyway, that's all about this article, kind of digesting the home market and why home prices are still going up in Utah and nationally. And so what are you guys' thoughts? What do you think? What will maybe break the camel's back and have prices come down? Or do you think that we're on a trajectory in Utah to have continued growth because of how many people are coming here and how many people are showing up in Utah. What are you guys' thoughts? Reach out to me anytime. And as always, my name is TJ McClelland. I'm the broker of Fitness Realty. This is episode 109 of the Fitness Realty Podcast. All right, see you guys. Bye.